All right, let's get right into it. For the longest time, it was just a given. China was basically America's biggest foreign banker. But that's changing. A huge shift is happening right now. China is cashing in its IOUs, and in this explainer, we're going to break down exactly why this is happening, and more importantly, what it could mean for all of us. So, to really get a sense of how big a deal this is, you have to rewind to the early 2010s. At its absolute peak, China held a mind boggling $1.3 trillion in U.S. government debt. I mean, that made them the single largest foreign lender to the United States. They were a pillar of the entire global financial system. Okay, now fast forward to today. That massive number, it has plummeted, dipping below $900 billion. And look, this isn't just some small market correction. It's a clear, steady downward trend that's been happening for the better part of a decade. That financial super relationship we talked about, it's fundamentally changing before our eyes. So, what are these IOUs we keep mentioning? When we say U.S. debt, we're mostly talking about U.S. Treasuries. And the easiest way to think of them is literally as IOUs. The U.S. government needs cash to pay for, well, everything, so it sells these IOUs to investors. For years and years, China was the biggest customer, essentially loaning the U.S. a ton of money. And all of this brings us to what some experts are calling the Great Reversal. Now, this isn't some accident or a temporary market dip. No, this is a deliberate strategic move, an unwinding of a financial partnership that really shaped the world economy for years. When you look at this timeline, the story really just jumps out at you. You see that peak, way up there above $1.3 trillion in the early 2010s. Then, right around the middle of the decade, you see the line start to slope down. It's a slow, steady sell-off that's picked up speed, bringing us to where we are now. It shows this is a long-term plan, not a sudden panic. Which, of course, leads us to the billion-dollar question, or I guess the trillion-dollar question, why? Why would China start backing away from what many people considered one of the safest investments on the planet? Well, it turns out it's not just one simple answer. There are really four big reasons, all working together. Think of these four reasons like pieces of a puzzle. You've got diversification, geopolitics, their own domestic needs, and, of course, interest rates. Let's take a look at how they all snap together to give us the full picture of what China's up to. First up, diversification. You've probably heard the old investing rule. Don't put all your eggs in one basket. That's exactly what's happening here. As China is selling off U.S. debt, it's been buying something else. Gold. A lot of gold. You can see how their reserves have just ballooned. They're shifting away from assets tied to the U.S. dollar and into a physical asset that isn't controlled by any one country. It's a classic move to protect yourself from risk. Second, and this one is a really big deal, geopolitics. Let's be honest, the relationship between the U.S. and China has changed dramatically. They've gone from being kind of cautious partners to, well, strategic competitors. In that kind of environment, holding $1 trillion of your main rival's debt, it starts to look less like a safe investment and more like a massive strategic risk. So cutting back on that exposure is just a logical, defensive play. Third, China has to deal with its own issues back home. Their economy is slowing down, they have major challenges in their real estate market, and their currency, the yuan, has been under pressure. So what do they need? Cash. Selling U.S. Treasuries gives them billions in ready-to-use money that they can use to steady their own financial system. Okay, so that's the why, but what about the consequences? What does this all mean for the United States? I mean, when one of your biggest lenders starts to back away, you're definitely going to feel the ripple effects across the whole economy. Think of it like a simple chain reaction. Step 1, a huge buyer, China, starts selling. Step 2, with them gone, the overall demand for those U.S. IOUs could drop. So step 3, to attract new lenders to fill that gap, the U.S. government might have to sweeten the deal. In other words, offer higher interest rates. And higher borrowing costs for the government almost never just stop with the government. That's right, those higher costs can trickle down, and that's where this can start to affect your wallet. It could eventually mean higher interest rates for everyday things we all deal with. Mortgages, car loans, you name it. It simply makes borrowing money more expensive for everybody. Now, before we all start freaking out, it is absolutely crucial to put this in perspective. This is not an immediate five-alarm crisis. The market for U.S. debt is still the biggest and most trusted in the entire world. There are still plenty of other buyers, from investors here at home to other countries, who are happy to step in and buy what China is selling. So let's zoom out for a second. This whole trend raises a really profound question. Are we watching the global financial map get redrawn right in front of us? What does all this mean for the future of the US dollar and its role as the world's go-to currency? As of right now, the US dollar is without a doubt the king of the hill. It makes up almost 60% of all the currency reserves held by countries around the world. I mean, look at that chart. Nothing else even comes close. And that dominance is exactly why a move like China's is such a big deal. It's a slow, quiet challenge to an order that's been in place for a very long time. So what could happen next? You can kind of see two broad paths forward. On one hand, maybe what China is doing is just the beginning. Maybe it leads to a more multipolar financial world, where you have a few powerful currencies sharing the stage. But on the other hand, all this instability around the world could actually make the US dollar look even more attractive as the ultimate safe place to park your money in a crisis. But if you take away just one thing from all this, it should be this. What we're seeing isn't just a country rebalancing its investment portfolio. This is a quiet, calculated declaration of economic independence. It is a long-term strategy by China to become less dependent on the US and to build its own economic power on the world stage. And that really leaves us with the final massive question. Are we just watching a gradual adjustment in a system that's going to stay more or less the same? Or are we watching the opening moves of a much larger geopolitical chess game, one that's going to redefine who holds power for the rest of this century? The truth is, that chapter is still being written.